Testing, testing. Hold on one second. You guys let me know if that is that good. Now we're on, and I appreciate that very much. Well, we've been just hanging out. I've been, I got this, let me know. Let's shout it in the chat. Very nice. I appreciate you guys even saying something. I know you guys are here, huh? Because you say something. Sound, okay. Let's see. Sound, okay. Very nice. Very nice. Let's see. Sound okay. It working now. Cool, cool, cool. Leo, appreciate that. Boom. And that's nice, huh? We filtered through quite a few people who just decided to, who probably aren't members anyway. That's okay, huh? That's no problem. But what I'm looking at right now, it's interesting. Just we could stream with some TA on on the screen. It would be interesting, huh? Yeah, nice and clear. Good. I had to set up the mic. I had to plug the mic in on that side. I got this new rig, and it's just got a few bells and whistles and this and that, and it doesn't like certain programs, so I'm trying to figure out what it's doing. It's an old but new rig. It's essentially just different equipment with different programs, so we're working on that jazz out. So, yeah, we could just have a channel with TA 24/7, huh? Very interesting, huh? You could just have that on the side screen. It'd be interesting to watch somebody just go through the details. In terms of the current patterning, in terms of everything, I want to shout out to Leo, and Marge. Nice to see you, Marge. Nice to see you, Marge. I know that Marge was VIP. We're looking forward to her joining VIP again, Marge. That badge looks good next to your name. Without a doubt, in VIP are missing you. So, yeah, that badge looks great on you, Marge. You should wear that badge. It's easy. You can slam in today. And if I wasn't loud at all, maybe it's so you and I could chat. Maybe it's destined. We're supposed to chat today about that badge. Let's get you in the back of the VIP. Leo starting his 2020 vision on the really on the laser eye vision, we should call it, in terms of the precision 100 rounds, guys. He started his 100 rounds in terms of the framework of trading. So we're really excited about Leo. He's 5'0", police officer from Australia, and Leo, we're excited about it. Can't wait to see what you get into, what all happens. It's going to be very, very nice, very, very nice. We're looking forward to you developing those skills, TA, and I know for a fact, I just tell you that VIP is the place to do it. I'm very excited about that. So, looking at the, and this is where we're at on the Fibonacci's, guys. The 786 is played a little bit north of that 786. Let's just say a little aggressively. We see that from time to time. What we don't necessarily see is the following. Take a look at this, guys. Now, this specific hit down in here in no man's land, from low to high on the range, this is in no man's land. That's not on a Fibonacci, right? Now, it would be on a micro fib from here to here, okay? But in terms of the entirety of the move from here to here, it's in no man's land. This level here, that next level down, if you're setting up your orders, trading on Fibonacci, this level here really punked out as well. So you had, yes, the 23, 6 played decently. This hit here was a random. This hit here, 38.2, the second real level down, was not a good hit. This level here was not a good hit, and I'm bringing this up for a specific reason. Please pay attention. Please pay attention. There is, and Bitcoin does have her down moments where she decides to rip through the floor irrespective of anything. But there's almost, guys, and just understand, almost kind of an unwritten code in the market, okay? Dealing with exchanges, with people who decide to program in different levels of the Fibonacci. Almost, guys, almost, okay? And now this is the almost code that exists. Almost can you count on the fact, and not entirely, and that's important, not entirely, the fact that if you miss 1, 2, 3, 4 levels of the Fibonacci, that somehow it's going to be made up to the traders. Somehow. Just tuck that in your toolkit in terms of your information, how you approach the market. Like if this was a messy, miserable first level for you, messy, miserable second level, then the third level, then the fourth doesn't even want to take either, right? And I bring this up because you'll see this frequently on other coins or other charts. You'll see, and it's just important to discuss because the Fibonacci's are a crucial part of trading. If you see, and you'll frequently see, first of all, Bitcoin has the potential to just nosedive, anytime she wants to. You guys know this. But in a structured kind of pattern setting, etc., where we have some expressed volatility to the upside, some grinding to the upside, downside, and some random Fibonacci levels that are hit, right, from the low to the high, they're just not specifically on Fibonacci. just watch and keep an eye out yourself, okay? Because I look at this intently from like a data set point of view. And Marge, good news to know that you'll be joining again soon. We can't wait. We're really excited. We really are excited, Marge. Bottom line, we can't wait. We want to get you back there. I know you had a bit of a hiccup in terms of 100 rounds. I think you got sick. Shout out to anyone who got sick at all with any kind of anything, flu bug or whatever it was, guys. Shout out to you, and I'm glad you're feeling better. That's the big thing. Glad you're feeling better. Looking at the top level of Fibonacci. Okay, see the expectation is there's going to be a hit, right? We got a small hit here on the first level, right? So that's nice. Had to play a touch aggressive. That's within threshold, no problem. But let's just say that she decided to cruise down to the next level. Next level, not really a hit at all, right? Not anything decent. And then what about the next level? Well, there's just nothing here. There's no pickup at this level. So the fact that we started to grind here, guys, and except for the top level, this is accurate. I won't even count the top level because it wasn't a direct hit. How about that? I won't count it because it wasn't a direct hit on the 23.6. So you'll see frequently, in addition to the upside target that we had from this descending wedge that was hit, you'll frequently see coins trade, guys, across the board in terms of the of what you're going to view or what you're going to see in terms of charts. You'll frequently see the market kind of make it up to people. Not entirely, but you'll see kind of a make-up move by the market because I tell you, the Fibonacci's are there, and I challenge you to look at your charts. Look at the details when you dig into a Fibonacci, right? When you are setting your orders, etc. First of all, understand this can happen. Boom. You're down through your golden pocket and you haven't gotten one clean hit. It's like anyone who has orders stacked at these levels is getting a little tired of the Fibonacci's in the market and on the entirety. At some level, they have to try and at least preserve some decorum of the basic tools they provide, right? Fibonacci basic standard tools of the market. You guys know that. It is what it is. That's a standard tool in terms of price growth, price action. So don't be surprised to see this level of interaction. Boom. As we would revisit that issue in the future, guys, I'll keep an eye on it from here till until then. But bad hit first level, bad hit second level, small, just nothing. This missed the line. Second level was just nothing. Right, carve in, missed the third level. Fourth level pours down through almost to the fifth level, and no good hits. So understand, guys, people do scale into these, right, with the expectation that there will be a trade at the top level, trade at the second level, at the third level, fourth level, that there will be trades here. Like people in the market to trade. So the Fibonacci's have been difficult, and I bring that up on this micro sequence here. In addition, one thing is kind of bothering me. I want to talk about this just to discuss it. Just to discuss it, let's put this in the context. But to finish the other thought, that's happening on the macro there in terms of the Fibonacci's. It's also happening on the micro. Okay, so the exchange is being a little aggressive, etc. You can define it how you'd like to, but in terms of the specifics that we're looking at, if you pull this into the real micro scenario here, you guys have seen that all day. We've been kind of pushing and prodding with the Fibonacci's. It just hasn't been. It's lacked that perfect aspect where we say it's nailed it. It's nailed it. Now we'll trade off that perfection for the volatility if we can. We just will. We'd be happy to do that. The thing that's striking me right now, and I think we need to put this into context, but when you look at the pattern, at the price patterning right now, this is just like we have to say this, guys. Looking at this fold over, this here is a strong fold over. You guys have to agree. It's a pretty strong fold over. Like, boom, when we came down to this level in the 30s, we grinded. We had some nice grinding. Now, we had a big, sharp drop into that golden pocket up above, 65th percent retracement. But then look, just nice grinding, bam, 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 just real nice volatility, right? This zone in here had some real dramatic moves into that 50, right? Some real nice moves in there. We saw, a real nice arc move in here, just real nice volatility to the upside, boom, then to the downside. Here we just have a real, guys, it's just, compared to the preceding level, we need to journey back to like the, what is it, 35 to 40, almost the $45,000 range to get some sort of a concept of what pattern on a micro level we're really going through. But it's definitely not this up, down, swing trade heaven that we've been in, right? So the reason we're talking about Fibonacci's is because this has just invited us to play on Fibonacci's. This was not very inviting to play on Fibonacci's either. As you guys would look at that was the preceding zone on the 50. That level on the 50, if you remember, we caught this low pivot here on the 4 hourly. That's our target right there. Boom, which we gave to everybody, guys. We gave that target to everybody. In terms of a lower than the 50%, boom, that is our target. Forever on that 4 hourly, that's going to be that's the exact target that we provided, like way up in here, right? It was a specialized target. Boom. So we own that 4 hourly pivot there. We'll never forget that. It's very nice. We own a lot of this stuff, guys. You guys know this. We own that double top. Bam, right? Called that. We own this like no tomorrow. You guys know this top level, just to recoup, just to recover a little bit. We own this move. Boom. Within 12 hours, I'd say, of releasing, hey, by the way, this is supposed to break down. Boom. Yeah, that was a big one, guys. If you didn't see those videos, they're there. I promise you, that was there. Boom. The double top is there. This going down, boom, is there. And this specific, right, in terms of to go up, right? Of course, this was one of the easier patterns was a descending wedge in this level. I'm just recouping this because we should talk. It's the weekend. We chill out a little bit. Let's talk while price is grinding along a little bit and put things in context, right? Descending wedge, that was an easy one. The uneasy portion of it, however, was the extent to which, and this was the issue, if you guys will recall this, it wasn't just that descending wedge. It was that whole descending wedge there. Boom. People wanted this. Bam. To the upside. You guys remember that? Yo. And what did we say? You guys remember? VIP, you guys remember? Oh, yes. Oh, yes, we remember. What was it? Well, quote, unquote, we need to spend, right, several numbers of hours in excess of this specific flat line, period. Boom. Called it. You guys know that. In order to move up, we need to spend, quote, unquote, several hours above this specific line in no uncertain terms, right? So to say we got this micro move, this move, no, we got that move, boom, to the downside, very nicely done. Then we had then we had the low target, which was nice, which came in short order. Bam, this range in here was exciting, guys. We wanted that sucker to go up. Unfortunately, if you guys recall, that was one of my favorite lines of Bitcoin. I just have to say, one of my favorite lines in Bitcoin. Let me see if I can take that heat map off of. I don't need to take the heat map off, but I'll just keep it on there. But as we would look at, where are we at on this? Where was this? The specifics up in here. I almost need to take that heat map off so I can see the framework here. Let me get into. Let me hide that. Not that. Let's hide the. If I can hide the heat map. You guys use the heat map. That 200 heat map. It's just called heat map 200. Okay, you guys can find that. Let's turn off the 200-week heat map. Boom. There we go. A little bit better. 200-week heat map. Let's go into the lines. And just to recover, just to talk about what Bitcoin has done, how she's done it, and where we're at, it's good to review the technicals, especially, guys, if you didn't trade the entirety of this puts things back together. We talk about a micro move here. Then we put in the condition of the macro. What would have been required to move up? Well, we didn't, right? Looking at this specific line here, that was the red line, unfortunately. You guys know that, right? That was one of those classic red line moments, and it was just, that was the red line, and it was just bam, bam. It just didn't give up, though. We were excited about it because it wouldn't quit, right? But, yeah, just never got past that line. And, I got to say, the Luna situation in here, I don't want to redo Crypto 2000 and 2022. However, I think there's some issues, right, in terms of unnatural market phenomenon. Because I just say at that level, we were in a bullish pattern, guys, and it was a battle to, yes, we had the bear flag huge, but we had this descending wedge, right, and it was just the preceding descending wedge here at least flipped up, gave us an opportunity to go up, and that Luna situation, youch. Huh? So the bottom line is this. Bottom line is this, guys. Never overexposed at any higher price. You guys know that. And let's framework into that. What does that look like for everybody that's watching this, listening? That's what it looks like. There's your cash exposure, right? And that's VIP. Just so that you know, that has consistently been our approach. I'm talking about since early, guys, early in the ball game, way before all-time high. Way before all-time high. This being the consistency of your approach in crypto. Some exposure at a top level. Exposure increases a bit towards these lower or mid levels. Then you start to get involved with some more cash. Boom. In terms of acquisitions, right? And below that, you have what? You have more cash. You have more acquisition, right? More capital. More of those reserves go into this cyclical coin, right? So this is the notion, has always been the notion, heavy reserve capital available for the lower levels. It sure looks like the right plan now, doesn't it? Yeah, that's our VIP guys. That's Bitcoin spike. What's up, guys? I know that you're like that anyway. You guys are attracted to this type of rationale because you don't hear that level of relevancy to something that's very cyclical. And everyone, it's interesting, guys. You have to admit this because everyone now from Bitcoin Magazine to Sailor, whoever it may be, may talk about, well, Bitcoin has already crashed this much 14 times before, so what are you complaining about? Man, I got to tell you, people are kind of complaining about the fact that no one told them to put heavy cash reserves down here, right, and stack a few the reserve components a bit above for these lower levels because it's so cyclical, right? Now it's one thing to say, well, it's so cyclical. See, we told you so. It's down 80%. Who cares? Well, man, we still can complain because we're the only place that told people to stack heavy reserve cash. I don't know if you guys disagree with that. If someone else was telling that to people, please bring it to our attention. We'd love to hear that. We would love to know that, right? Just the truth. So, in terms of the specifics, just that's a little bit because some VIP are new. You don't have to watch all of the old videos. You just don't have to. That's you can take our word for it, or you can watch all the old videos. It's up to you. But that's just the truth in terms of recapping kind of Bitcoin for where we're at. And I want to shout out to all the guys. Shout out to Amos. What's up, Amos? I see your picture up there. What's up? And shout out to Leo, my man. What's up? Appreciate it. Glad we got together today. By the way, Leo, very glad we got together today to start those 100 rounds. It's going to be nice. You see this 20 moving average on the Bollinger Band? Very nice if you add the Bollinger Band to your 4-hourly chart. It'll go on all your charts when you add it on any of your time frames. It'll go on all of your time frames, just so that you know that. I'm sure that you know that. Also, make sure that you have a premium edition of TradingView. Make sure you get the live pricing, very important. But to look at this specific pink line, that is the moving average, the 20-period moving average. Okay, and you can just see, by definition, price is just going to dance up and around it. You see preceding zone, price by definition is just going to be up and around that zone. And you'll see it's a bit of a warning here. At least it was a precursor, this being used as resistance, right? Look at that before this big move to the downside, used as resistance. There you go, bam. And then it just was a flood to the downside, right? In this zone, it was resistance. Then look at this, hopped up and over, right? It hopped up and over. You see the candle set up and over. This is an interesting point here on the 4-hourly. Up and over with the candle set up and over. And then, boom, what did it do? It contacted the opposite line, right? We're doing some detailed Bitcoin work in the back, just to let you guys know here, right? With Bollinger Band, the strategy. Shout out again to Vlad. He knows what's up in terms of Bollinger Bands. This hopping the 20 again, boom. Here, look. What was the next? Boom. Throttle to the upside, right? Then it was that capitulation back down through, setting this specific candle below the 20, contact with the opposite side, right? So that flip of the 20 moving average is indicated frequently for targeting the opposite side. It is it's a mid-level reversal feature, right? I would say that a mid-level reversal feature. In terms of at least contacting that other side of the band, it's kind of necessary. So I bring that up because right now we're just floating along that specific 4-hourly pretty strongly, right? Pretty strongly. And let's dig into the 5-minute. And guys, these are the times when Bitcoin, she doesn't make you pay, right? You guys know that. She's not making you pay, like literally pay. But you guys know that because we trade a lot. You guys know it's like, well, this was nice, huh? Everyone, you want this again? It's like, I'll take this again. Like, at 8 a.m. every morning, let's get in, let's rock and roll it. The market just isn't into, handing out 10x's which on 125x, guys, I was well over a 10x. But it's just not in the business of, giving everybody 10x opportunities, 3-4 times, sometimes a week. Yes, you get them 3-4 times a week on Bitcoin. Believe it or not, 3 or 4 times a week sometimes. We counted that. Was that preceding zone? Guys, was that 7 times? 7 times in 7 days there was a 10x opportunity on Bitcoin? Yeah, what's up? That's some volatility we can deal with. So when she carves along like this, I know everybody's just sitting there, and VIP are just like, well, she's going to do this. She's going to run off all the traders again. She's going to run off all the traders who get excited that the whatever new altcoin just went up 30%, and VIP know now is like, man, whatever, that's not going to happen, right? We're gonna be focused on this because bam, next launch, right? We're gonna catch it, and that's the idea with Bitcoin Spike. Makes it a lot of fun, but once you grinds just like this, just understand there are good trades still in this zone. We pointed this out, and it was just nice to see this. We'll recover this for anybody who wasn't in the back today. And shout out to all the VIP. We appreciate you very much. Just very, very much, guys. All of you, each and every one of you VIP, we appreciate you guys a ton. It's the right group. You guys know that. And I tell some people, it's like, we don't need you to join. I don't mean it like, look, man, we don't need you to join us. I don't mean that. I just mean, honestly, like, we don't, we're not having, like, bake sale and handing out cookies. We got to have more members. That's not the idea. We don't need you to join, right? That's the idea. It's not like compulsory that someone else join. No, we have the right group. I'm just going to tell you that. So the right people come along. And the ones that need, like, convincing and different stuff, they're probably not the right people. The people who can hit the button and say, that sounds cool. It's a trade group that's winning. Cool. That's what we're about. The guys who have to question that and be like, well, I have to really think about it, being a part of a trade group that's winning. Well, I got to tell you something, guys. The news flash is they're not winning. So not everyone wants to, but for VIP that are members, that's the feather in the hat that I'll give you guys. And it's the people, unfortunately, and I see this all the time because I deal with a lot of traders. Understand, it's not an insult, and listen, it's a psychological. When I'm saying this stuff, it's about the psychology of the market, so we can understand, differentiate, help better other traders, etc., and ourselves. As we look at this, it's the mentality that a trader is not winning, right? And that a trader sees a group that is winning, and the trader doesn't want to be a part of it. The trader somehow needs convincing to be a part of that group or this group, or has a different question, or has to go through one more round of his own trades that he just lost real big on. And I get so much of that, guys. I get so much of it. It's like, man, I want to join, but I just lost a big trade. I'm going to have to come in a few weeks. And I'm like, man, you're doing it the wrong way. You get into VIP, you work on your skill set, you get with the group that's winning, and then you decide whether or not you're going to up your amount per trade. It's just very important. That psychology is there. Not everyone wants to win, right? So that's the key feature, and I say that all the time. And it's not to judge at all, but not everyone is geared to want to win. It's just, I appreciate Leo tonight. I put Mission Impossible. That was cool for Leo because he wants to win, man. It was so cool. I put that in the back. I'm like, your mission, if you choose to accept it by Tuesday, is to accomplish the following. I want you to successfully trade this descending wedge in the 4-hourly, right? And what did Leo say right away? Literally, Leo sat there and he says, I accept the challenge. Boom. That's it, right? He wants to win. He's there. He wants to trade. He wants to win. It's nice to see that and I bring this out as a distinguishing factor and just a positive element for VIP. I don't bring it out to discourage or point fingers or harm or embarrass. That's not the idea, guys. But as we develop the culture and as we rock solid and tight, like if we all sit around a table and it's like, okay, we're going to play poker tonight, or we're going to, whatever we're going to do, it's like, all right, what are the rules? What are the ground rules? Okay, it's it just is what it is. It's like it's the house rules, and you guys are the house is as such. The house is full of competitive winners, right? It just is, and I have to shout out just to and Leo just started his 100 rounds. Look at this, and we have plenty of time to do this. This is one of the most important things to do. And I know it runs off other people, etc. But I said your mission, if you choose to accept it, is to successfully trade this wedge by Tuesday. Look at that. I put the wedge in there, and look who said. And there's Leo saying, challenge accepted. Boom. That's what VIP is all about, right? And it's just nice to see that that framework put together continually where you guys want to win, right? And it's just not you can't create that in somebody. So it's a small. It's not too small. We got 20, 30 members, something like that. But it's just the right group. Nobody else puts up numbers like you guys. So not everybody fits in, right? And not everybody is destined to be in a winning trade group. And unfortunately, and I say that because some people are out there and they kind of want to join or don't want to join. But it's just, you got to want to win, man. You got to want to win. And nobody's going to break your arm, twist your arm, telling you, man, you got to become a winner. It's like it's either going to happen or it's not going to happen. So we're excited for the VIP because they've all made that decision. They want to win. And Leo, we want to see you trade this. We definitely want to see you trade this wedge appropriately. Now, digging into a few more of the details. We have the macro. The easiest approach, I'll tell you, in terms of a cover strategy. Now, first of all, cover strategy, we start macro. Let's just go over the notion as a macro to a micro approach. How would you approach this market right now? Like, how would you do this right now? What would you do? Well, we know we went through the heavy backup reserve cash, right? We know that we have a low to a high macro Fibonacci. So we have the 786, right? In and around that 14.5 to 15. You guys measure that from the low to the high. No problem. We understand stacking orders at the lower levels, the 86 as well. Without a doubt, we understand that. We understand, guys, very easily, preceding levels of resistance, we understand those can catch in and around that 14.3, that 14.3 to 14.5 is that going to be real nice in terms of that overlap with this preceding high on the macro, right, in that 786. It's just stayed off of it for whatever reason it's wanted to. So, but we would start there with capital allocation, right? Just in general, that's what we would do. Like, how would you approach? Like, how much would you? Is it the bottom, right? Well, there's some nice targets below, right? In terms of the bottom line is there are some nice targets below, right? Some targets you definitely, I mean, any rational person is going to have some capital exposure for those, some increased capital exposure for lower targets, always. Right, that like goes without saying, doesn't it? Right. So, looking at that from the macro, we then dive into the micro, right? And that lower levels down in this zone here, right? Boom, down below. But we go from that macro into the micro. Then we would start to approach, just like we did on the macro, we would start to dig into this micro on, let's say, the 30-minute time frame. Then we would start to, I'd say, allocate trades between this specific lower feature here. Do we want to go to the lower targets? Well, there's some good targets, right? Definitely loaded up at these lower targets, right? Those are good targets to, they'd be great targets to hit, right? We'd be happy to hit an equivalent low here. Boom, boom. We would get, I would say this, guys, we wouldn't get creative, right? But we would definitely be interested in some additional targets to the downside. We would definitely be interested in some additional targets to the downside, right, below the specific Fibonacci set here. Now, you could go into the Fibonacci, right, and we don't do this frequently here, but you can. You definitely can. You could go into the Fibonacci and include your levels, your additional levels that we normally typically don't include. Now, I don't do that for purposes of clarity, just so that you know, so that you don't wind up with personally, and guys, understand this for VIP, please listen. That's so that you don't wind up with tons and tons of levels below on all of your charts anywhere you bring one of those up, right? So we don't click back and forth frequently. What I normally do is add on extensions, right? But to the extent that you would like to incorporate that into your additional levels below in the extensions are a little bit complicated for you, I would recommend doing that. Boom. Right, and we don't cover that frequently. It's just in terms of having all the levels below, it gets a little bit cumbersome visually, just to let you know, right? So, and where would we go from there? Okay, we would know the 786, the 86, and the full completion, and the levels below, right? And if you're doing that on the Fibonacci, right, retracements, I would say also do that on with your extensions, right? This preceding move here, boom. Let's get some targets. The preceding move from the entirety of this move here, bam. Let's get some targets on those extensions, right? That's how you fill this zone in here with some additional target levels. And really the easiest, guys, the first and foremost is buy at support, sell at resistance. And guys, it sounds like, well, that's just useless information. Who was in the back today? Everybody knows this. Who was in the back today? Well, whoever was in the back today saw the simplest, I guess, just useless framework. And guys, it's a joke that it would be useless, because how many 2X's would you have gotten today just buying at support, selling at resistance? It was 1, 2, just the afternoon. Bam, bam, bam. Literally, just a 2X here, a 2X here. Very easily done. We were setting up your first hedge, Leo, during that time. So that was nice to see. It's like all you got to do is buy at support, sell at resistance. Bam, bam. It's not, guys. It's not a life-changing move, but it's a percent move to the upside. It's 0.98% to the upside. What's this, guys? That's really all told is going to be, if you were still in that move in Leo, you might be still in that short. I don't know, but that's pushing 100% as well. So the framework is there. Buy at support, sell at resistance, trade your patterns, and hit your targets. Right? That's where we would go to next in terms of the overall kind of capital allocation understanding. And you can read about all this stuff, guys, for your own interpretation. Your own interpretation, right? Read about that in New York Institute of Finance. Do that. In terms of your levels of capital exposure, etc., we're always really light until that level of consistency goes up, until you're comfortable booking 3, 4, 5 trades in a row. Boom, anytime, right? That's when it gets exciting, right? And you'll find a lot of things in life that will accompany that, not just your trade skills, but your level of focus, right? Your trade setup, right? When you trade, etc. It's not just all whether or not you can do it, right? But you may not be able to do it driving down the highway, right? Or hanging out with the guys playing poker, right? It's like, I'm trading. Hold on, I'm trading. So a lot of things may change as you become more precise. So from those overall capital allocation strategies on the micro that we looked at, you guys know that on the micro, looking at those lower levels of the 786, etc., down into this micro. We will formulate some additional strategies. I'm just interested in this. I got to keep saying this, guys. That specific layover here is just a big layover compared to this preceding zone. It's an extended framework in terms of that this trajectory to the downside. It was nice to get the volatility. This was a volatility, right? But I got to tell you, when we look up here, looks can be deceiving, right? This move, and please pay attention, this is a big point, guys. This specific move, and I can do this, you can do this anytime you want to. It's very interesting. On your trading view, make sure that let's go to the, if I can find, price range. Let's go to the price range here. Let's find this price range was a $10,000 move, okay? A $10,000 move. We'll get as close as we can. $10,000 move at that specific 50% retracement on the macro was what, guys? Was what? Well, that was a 29% move. All right? Let's take that down here. If we got that specific equivalent move here, just to look at it, guys, that was a 30% move here. If we got the same $10,000 move here, it'd be 56%. So 30% turns into 56%. I'm not sure what. Well, and we reserve our comments for VIP. But to let you guys know, level of support to resistance kind of approach, overall dynamics, etc. If you're just tuning in for the first time, please don't take any of this as financial advice and refer to your script of TA that you're familiar with. I'll say that if someone's watching from a foreign country or anything along those lines, just refer to just refer not to financial advice. Let's do that. So looking at the framework of the, and I don't know, someone's watching from Pakistan. That's nice. That excited my dog. He heard Pakistan. He starts barking. I don't know why. So looking at the framework here, we're going to dig in from the macro to the micro, but I want you to pay attention to one thing. As we do a comparative on this zone here to this preceding zone here, right? This is a 29% move. That would have been a 56% move, right? So that's important for us, and welcome from Pakistan. We welcome you, brother. Congratulations on finding us. That's a big deal. It's not easy to find us from wherever. So you may be watching. We don't hide in, off of YouTube, but yeah, it's just an exclusive group. It just is. That's the fact. So I don't think everyone gets the push of the information. It's just the truth. So looking at the equivalent, guys, this move here has been a decent move. It hasn't been as strong, right? But we get into the relativity of it, right, very quickly when we start to say, well, it's like, it reminds of this higher pattern here. This pattern up around the $45,000 mark here. Just this slow, this high arc over, this low arc over. But yes, the equivalent move concept is there, because if it were the same height, okay, $10,000 at this level is 55%. $10,000, and just think about it, $10,000 on 40K, right? You're looking at a much smaller percentage. I always say $1 on $1 is a much bigger percentage than $1 on $100 or $1 on $1,000. Okay, so the same $10,000 at a lower price point would be a really phenomenal move. So yes, it's very similar to this this zone in here, right? And I know you understand that that concept now. It's like we really have to zoom in. We're focused to zoom in to see the additional price action. So Point proven. Yeah, you guys get that. 10K down here is a big deal. That marches back up to the $30,000 range. And looking at the framework here, I'll just say, guys, I'm not too unimpressed with the price action. The last since the spike, it just seems like it's been. Again, I get the notion that buyers are there. That's the notion that I continue to get here, is that buyers they're just not relinquishing fully. Right, we saw a big pour down, bam, here. A lot of grinding, inconsistent grinding in this level until bam, we got a breaking point there. That was nice. VIP booked a lot of trades there. But it's just the feeling that I get, guys. In terms of that, it's the price action, it's the moves. It's not every descending triangle going to the downside. So some of those technical issues are framed at us when we're trading. It's like, okay, is every descending triangle going to break fully, bam, to the downside with the amplitude move? Not exactly, right? So, and let's reframe this. This is one of the most important features as we really look at this. I'll tell you, there are a ton of orders down in this level, okay? A lot of individuals who just bought sub $18,000 Bitcoin, a lot of those individuals, guys, made good money here. Okay, so this is actively in the memory bank here, without a doubt. This sub $18,000 move maxed out at over 20% in a week. That's good cash, guys. That's real good cash, especially if you're on any kind of leverage. That's big. That's a big deal, guys. That's up to a 2,000 plus percent, up to a 20x, almost a 20, really a 25x potential. That's a big deal, guys. So in a 7 to 8 day time period, very important. So just remember that in the memory banks, in terms of like if we can get to this level, there's going to be orders waiting at that level. I don't see a break point where we would say, okay, we're going to give up the entirety of the $20,000 range, and it's just we're going to be heading down. We don't have just to frame it, we don't have a bear flag necessarily in play right now. We do have, and we can say something with some caution, with a degree of caution. We have a technical continuation pattern. Okay, the caution that I'll give you is that the technical continuation patterns have been producing fallouts. Okay, so that's the caveat. They also have been producing nice targets to the upside. So to the extent that this is a fallout provision here, right, I'll just remind that at least we had some success with like a descending wedge here, bam, to the upside. We've had quite a bit of, they've traded nicely, and they have really acted as conduits to the downside as well. So in addition to that, but if you guys will recall, we did have that flat bottom support here. Guys, do you remember that we caught in the back? Yeah, and you guys will recall this. Yes, we had the alternative descending wedge, but that flat bottom support was a big deal as well that we were really looking at in that zone. And that was a big trade for a lot of VIP guys. You nailed that. Congratulations. So I guess just to put the framework together in terms of what we're looking at, it's a. And on that note, let's go ahead and say it, because I don't really necessarily want to say it, but let's go ahead and say it. We're in a situation with a flat bottom support now. We have to technically note that. On the candle wicks, I believe, yeah, we noted this in the back. On the candle wicks, boom, we're in that dynamic of a flat bottom support. I don't want to reference that top zone necessarily personally, but I have to, right? Technically, it's there. So we'll do that. We're in a flat bottom support descending triangulation. Expectation technically would be to the downside. Right, and I guess the momentum factors are what I can't really digest too well technically, in terms of it doesn't it's not copacetic. It's not what we expect to see in terms of, although with MACD, I'll say with MACD, it's a very inconsistent indicator. It's one of the reasons we don't rely on it so heavily. But when I see a triple indication, right, MACD rising on the daily, on the hourly, on the 4 hourly. Yeah, if it's good for anything, this is where we get, guys. If MACD's good at all for anything, is it that, oh well, London and VIP were wrong on the triple divergence MACD? No, London and the VIP are not wrong on a triple divergence MACD. If anything, if MACD is worth anything at all, it would react. If any divergence is to be expected whatsoever in the future, how could you not have, guys, a triple divergence on the daily, 4 hourly, and hourly? Right? Literally, we may just call all the divergences off if this doesn't play out with any kind of significance. I mean, Honestly, guys, why? How could you have a triple confirmed divergence and no price action? Like, come on, guys, come on. That's that's a bit much to ask us to continue to entertain, because at that point it's just like an entertaining feature of the price action, not something we would want to rely on. So we're watching that divergence, and that's noted for a record in the video. Period. Just on, let's say now on this video about that video. I think that's a fair assessment to make, right? And we'll note that heavily if these divergences don't play out at all. So we're in kind of a mid-level function with the descending wedge. Be prepared to operate along this specific level of support here. Would be nice in terms of in line with the 786 and the 86, without a doubt. And we'll be digging in the back, guys. We'll be digging into patterns in the back, etc. And I know that you guys are trading, doing well. We've been on the micro all day long. I know that you guys are having a good weekend because we're hanging out together in the back. That's what's important. Want to shout out to AJ Crypto. AJ, look forward to chatting with you mañana. My man, what's up? We'll have some fun talking up tomorrow. And want to shout out to Nick Balls. Nick, I hope you're doing well with your trades. I want to see your trades. I want to see you book some trades. And Marge, we want you to rejoin. ASAP is not the same without you. So do not delay for tomorrow what you can accomplish today, Marge. That's serious. I gotta say that. Don't put off for tomorrow what you can accomplish today. We want you in the back. We want you at least in the back learning, etc. That's some very precious time there in the back. So, guys, let's go trade in the back. I just wanted to hang out with you guys a little bit. And Leo, appreciate you letting me know, and Marge, about the sound. We just started up here, and I got this new big-time studio microphone, whatever, so it had to flip the switch on it. And let's go, guys. I am going to be trading myself. I'm going to take a position in this zone as aggressively as I can towards at least this bottom line of the support. I want to see if I can hit into this line of support, if it will give it to me and give me one more hit here. Bam. That's what I'm going to try and do. She'll get there. And we'll see if she can get there. Guys, do be careful on this zone, though. If you're going to take a position there, if you're not ready to interact quickly, do be careful along this bottom line support to the extent that she decides that she wants to aggressively react down to that 786, okay? Always watch those levels of support. When we say buy at support, sell at resistance, on a descending triangle, you want to be careful, because you may be at the point where a lot of people are entering into shorts, right? It's, may push along here for a moment, provide some trades for the traders, but essentially this is the level where shorts become very excited about selling, and boom, to the downside with that amplitude move to the downside. So watch that level. I'm looking forward to it, but I'm also ready to trade it aggressively. And this is London with Bitcoin Spy. Guys, we will be around in the back. Just wanted to come and say what's up, say hello. And it's Saturday. We got a long weekend, at least domestically here. And another shout out to Leo, brother.